Hey, what up, everybody? So I had a pretty break-even morning trading Dell today. It popped up on my scanners because it had earnings and it beat on the EPS, but it missed on revenue. And they also lowered the forecast for next quarter's earnings. So the stock gapped down in the pre-market. It was like a 12% drop. You can see it here. This was pretty significant, and it was also it rejected. Oh, come on! It rejected a level. I have it marked here. Um, yeah, it blew right through this level. This is my, what is that? It was former resistance, then it turned into support, then resistance. So it broke out of resistance. Now it's support. It tested on support. So yeah, this was a significant level. Multiple times it became support and resistant over the past several months. So it gapped down. It was already trading below that. I figured it was a pretty significant gap, and there was a chance to fill the gap. So initially going in to the open, I prepped my chart, and my bias was long, but at the open, it bought up in the first minute, and then it sold off and broke the bottom of the 1 minute range. So that, and that combined with what was going on the time and sales and the level two was showing pretty bearish action in the immediate future. I saw lower and lower bids building up, and I changed my bias. That's the importance of having a flexible mind, being able to change your mind, not your mind. Like, my overall thesis was still long, but for an opening range break, I changed from long to short because the support didn't come in at this important opening range level where it was supposed to. And also I had that level marked from the pre-market because it showed that it was finding support on this green line right here. This is a shorter time frame level that I had marked just for the open, just to see what it did at that level. And as you can see, once it broke down, um it came back and retested, and this is what I was waiting for, to see if it was going to break back up and I would take the long, or if it retested and rejected again. It did reject, so I jumped in, caught a nice little squeeze down to 121. The move happened pretty fast. I was only in the trade for a few minutes. I was able to take some of my bigger size off here, and this is the flaw, that if you're not quick to catch, can be detrimental to your trading. Now, I got caught in the hoping game because I'm like, ooh, it's gonna keep flushing, it's gonna go down, yeah, it's gonna tank. But my overall thesis, keeping that in mind, is very important. Even if I changed my mind and shorted it temporarily, this should have been an exit point. But I removed like 50% of my size, and I held initially to break even. But then the thought popped into my head that, maybe this thing is gonna pop up above my break-even point and then squeeze back below, and I'll be able to catch another entry and add to position. It's just gonna sell off all day. Why not? It's already showing very aggressive selling at the open. But what I did was, instead of exiting at break even on the remainder of my shares, I held them, and I ended up exiting up here. I didn't lose any money on the trade. I still made a couple dollars, but I gave back some of what I made, and it wasn't it was a poor decision. Like, I don't like to trade like this, and obviously this is something that I'm gonna have to punish myself for, because I'm very disappointed. But VWAP is very important, especially at the open. So when a stock reclaims VWAP, that's usually a sign, especially when it comes back on the retest and doesn't break it again. That's a sign that the stock is bullish. And I saw it on the tape, but I was just kind of hoping at this point, and you never want to get caught hoping the market is going to do what you want it to do. You always want to be open minded and receptive to what the market is telling you it is doing. So, this yeah, it wasn't the best trade. I did still have a strong short bias just because I changed my mind, and I was a little frustrated. I took some more shorts here, and I averaged down. That's a no-no. You're never supposed to do that. And I realized immediately that I wasn't in my right state of mind, and that's important to protecting capital. We all gonna have days where we wake up and we're just not feeling it, or we're not into it, or we're not focused the way we should be. And rather than let it carry out throughout the remainder of the day, I just I cut this trade out after that stupid ad, averaging down, and I just called it break even for the day. I did watch the stock a little later in the day, and I, this would have been a nice move to catch. I caught this on tape, and I'll be reviewing it later. And that's an important thing too. When you're trading, you want to be recording your screen. You want to be reviewing what happened, especially in these big areas where these bigger moves happens. You want to see how the relationship to the way the stock moves away so fast is with what goes on the time and sales in a level two, because this is the leading indicator. And what you see here, I've said it before, happens before it shows up on the chart. If you can catch those little shifts in momentum, and changes in sentiment as they show up on the tape, because these are live orders. Every single order that hits the market on any stock has to pass through time and sales. So you'll see anybody. There's nobody that can hide from the market and initiate any type of position, whether it's the institutional market maker, whether it's a mutual fund, or a big bank or hedge fund or whatever it is. They have to show up here. And if you can see, these are some of the bigger order filters I have set. So like when these bigger players get into the market, you'll know. And that's what causes some of this momentum and volatility in the market when they start initiating or liquidating big positions. And you'll see it on the volume bars as well. Later on in the day, the volume is always a little drier than it is at the open. So that's another thing you just want to be mindful of, is the time of day you're trading, and waiting for more confirmation when the tape slows down and there's not as much volume, and you're not able to read what's happening in real time as clear. But yeah, some of my scanner presets that I use, I look for stocks that are trading with greater than 1 million shares in the pre-market, and have also gapped up 2% or down 2% or greater. That's very important for my stock selection process, and you should also always have your own criteria for selecting stocks, and not just be trading randomly. You always want volume. Volume is very important. It's what moves the market. So I think greater than 1 million shares as a prerequisite for prepping and trading a stock is a great starting point for anybody who's interested in trading and taking it serious. I used to have it at 500,000, but the way the market moves now and the volume that's coming into the market is a lot different than it was in the past. And 1 million shares, it's like every single stock nowadays has 1 million shares, greater than 1 million shares being traded in the pre-market. It's almost like more people are turning to trading than ever before. So those are two important presets, and I'll be sharing a screenshot of my presets. I use TOS for my scanners, Think or Swim. So if you did have a Charles Schwab account, or if you don't, you can open up a Charles Schwab account, and then you can apply and download the Think or Swim software, and you'll be able to have access to those scanners and set the presets that I use. Another thing you want to look for is market news. So you want a catalyst. You want a catalyst for any stock you're trading. You want a reason why the stock is moving the way it's moving. And yeah, we all have our like fave stocks that we go to, and you don't really need a catalyst for, because you're familiar with the stock and it always has volume, and you know how it moves so well, and you can just kind of trade it if there's nothing else to trade, or if the stocks you prep that did have a catalyst don't act the way you want them to, and you're just not interested in taking a position. It's always good to have a couple that you can fall back on. So I usually prep 2 or 3 stocks in the morning, and I kind of have my primary that I'm watching like my main stock, and then I'll have like another screen on the side where I'm paying attention to a secondary. And then if one of those is not performing well, or there's not a lot of volume or good order flow coming into it, I can change the channel and go to my third choice. But it's never more than that. It's usually two, sometimes three. You don't want to be watching and prepping too many things, especially when you're using the tape in level two to time your entries, because reading tape is very, you need to be focused, and you need to be like super like zoomed in on what's going on the tape, and you just can't pay attention to that on multiple stocks. Like, you really have to just be focused on one screen when you're watching tape. I'll show you another cool thing on my TOS platform. And this is why I like using TOS for scanners. So yeah, this is Thinkorswim. We're inside. This is my main screen. I also have a few screens that I watch stocks for within the Thinkorswim platform. And if you haven't been to Thinkorswim before, just to know your way around the platform, like, this is a chart section. There's a trade section. You can kind of customize these windows and do whatever you want with them, and remove them and have multiple screens going on at once. But this is the scanner right here under the scan section. And these are my presets. I'll screenshot it and drop it in the comment section below for anybody who's interested. Um, and basically, your stock section on the first preset is set to mark. Mark is just like kind of like the price that's in between. And volume right here, I look for greater than 500,000. Like I said, I used to do 500,000, but as you can see, not many stocks are worth trading if they have less than 1 million shares. So I kind of narrow it down based on what's trading on the greatest volume this morning. As you can see, SMCI was on my scanner as well. I saw Mara was it wasn't, I actually had Mara on my prep list, but I was at 4 stocks, and I eliminated it just because the pre-market volume wasn't as good as a couple of other stocks I was watching. But yeah, this is for my gappers up. And this is the same right here. You can kind of like have different presets, and I have a gappers up, I have a gappers down, I have a gappers down that's less than $20, and I have a gappers up that's less than $20. And this is where the percentage is. So in after hours, you're looking for greater than 2% on the gappers up, or you actually change it to a negative. You'd say less than 2% in after hours if you wanted to do it for a gap down. And then you just after hour percent change, and you're looking after the close has moved less than 2% or more than 2% in the pre-market. And that's kind of where you go with this is the market cap, which is like the minimum shares that you're looking for. I mean, not shares, it's like shares times the price of shares. So like, I'm looking for at least something that has a $200 million market cap, because I don't want to be trading the low floats. I try to avoid trading those just because. So usually what pops up on my scanner, I have the price filtered for $20 or greater. And it's just, stocks that I'm interested in trading that are usually large caps or mega caps. And my small cap scanner is just the same thing but less than $20. And this is a free tool that you can use. I know a lot of people like to preach about paying for scanner software, and it kind of becomes like a barrier to entry for newer traders, because you realize you got to spend all this money on all this equipment. But Thinkorswim is a good free platform. It's a great platform to get started with. And I use DOS Trader Pro as far as trade execution. But if you did have a Charles Schwab account, you don't have to trade using the or Swim platform. You can actually download or link the DAS software to your Thinkorswim platform. If you can see the window here, like, let me go to the same stock I was watching this morning, just to show you, like, the tape. So DOS is the fastest order execution. Most people don't understand this or know this, and they say, why would I pay monthly for a platform if I can get it for free? But this allows me, for one, to use the same softwares that the bigger institutional players are using when they're executing trades. Prop firms use this. A lot of people, it's very popular because it's low latency, and they have very light, like lightning fast order execution. Like literally, once you hit an order, it executes immediately. And rather than filling out orders the way normal people do, by like manually hitting a button, or entering your amount of shares and what you're willing to trade, what Thinkorswim lacks is that it doesn't allow you to program your own hotkeys. In DOS Trader Pro, your hotkeys are 100% programmable. Like these are some of my hotkeys that I use, and you can adjust your size based on the amount of money you're willing to risk. This is a fixed risk hotkey, so when I double click on my screen, it automatically sets my stop to the area where I double click, and when I hit the button that I have programmed for that entry, um in the size, it enters at the market whatever number of shares it calculates based off of the distance between my stop loss and the price I'm willing to risk and the amount of shares. So it does a lot of the thinking for you. So when you don't have to think, you can react. And that's the most important thing, is when you're seeing a setup, is being able to react on it and capitalize on it. And also the information and the order flow that comes through the DOS Trader Pro platform is a lot um closer to the real time transaction that's actually taking place. Here, you're going to have a little bit of a delay, and that's some of the drawbacks of using free software. You're going to have minor things that might not seem like a lot, but when you're trading thousands of shares, or risking your own capital, there are certain things that you can do to tweak it, and to keep more of your profits, and to minimize your risk, basically. So yeah, this is Dell, and just to show you real quick what it looks like, Dell. This is the same thing. The time and sales are level 2. It doesn't move as fast, and what happens on the chart even is going to be a lot slower here than it is going to be uh in DOS Trader Pro. And you can see the difference. Like this screen is just, it's like a real-time order flow of what exactly, like as soon as the transaction takes place, it shows up here within milliseconds, like not even a second. This thing is showing you exactly what's happening. And then the arrow right here, you can see it's always wiggling because there's always movement in the market. So when I look at my Thinkorswim platform, like the bubble on the side of the screen for the um actual price, it's really not even moving around. And the same thing with the time and sales level 2. It's just like a delayed feed. You can just tell there's a lot that you miss in those little seconds where the big move happens, and you want to get a better entry. For better entries and for fast order execution, hands down, DOS Trader Pro is the best. It's the best the market has to offer. And yes, you get what you pay for. So if you're comfortable using free software, by any means, but you can link this to your Charles Schwab account and use DOS Trader Pro. I use interactive brokers for trading, just because order execution especially is important for me. So even though I paid like a small commission for each share, I get the best fills and I get the best order execution. That's the most important thing for me. And Charles Schwab, you don't pay commission, so it's 100% commission free. But you get the delayed feed, and you don't get interest on your money. One of the upsides of interactive brokers is that they give you interest on the money you have sitting. I have interest that just comes in every month based off of the money that I leave liquid. And since I'm mainly focused on day trading, I don't take any overnight positions in this account. So most of my money is sitting liquid in cash when it's in this account. Now, interest that I get on the money that's sitting in the account, like for example, if you have 100,000, you might get a few $100 a month in interest. But that really beats um it really beats having your money sitting in an account that's not giving you anything. So even when I'm not trading, I'm making money with interactive brokers, and I just think that's really cool. you know um I'm going to be sharing free game. I hope you liked the video. If you do have any suggestions or comments or concerns, please don't hesitate. Feel free to drop them in the comment section below. And yeah, as they say in the trading world, keep it green. And if you're interested in learning more about trading, or if you have any questions related to how you can get involved and be able to do this effectively and consistently, yeah, just shout it out, shoot your concerns, and I'll definitely mention them or address them in a future video.